little bit of a meh week here, but it seems like the market is in a wait and see mode. What do you think when we are talking again a week from now will be the single biggest driver of the market throughout this week?
You know, it's really hard to pick a single biggest driver. Probably some of the Fed speak, as you alluded to, coming out, because we are definitely in that meh period where between earnings, we had stronger than expected earnings in the second quarter. We've got to wait 4 or 5 weeks till we get other earnings. We're past the Fed meeting, so that's out of the way. You know, people are watching international politics. I mean, they're really struggling to pick one specific thing. But I think we are really going to have to be, the Fed has ensured that we're going to be very data dependent. So every piece out this week, we'll aggregate it all up by the end of the week and then really start focusing on what those Fed governors say when they're out on the talk circuit.
Carol, do you think the market's too hyper-focused on the Fed, and why?
We do think that the markets are too hyper-focused. And a piece of it is if you step back and zoom out from it, the Fed has much less control over even the short-term economy and short-term rates, because a lot less of the lending goes through the formal banking system. We've got a lot of alternatives to credit now. We've got a lot of alternatives to financing now. We've got the IPO markets behaving differently. And a lot of the models and the data sets that the Fed predicates its numbers and we all look to are built for a time that doesn't necessarily exist anymore. And when you actually look at the models too, they didn't really work in 01, 02, they didn't really work in 08, 09. And so stepping back and looking at demographics and a lot of other quantitative inputs is really important. And it's something that it's really tough to do.
Well, it's interesting because I kind of look at it like the market is just going to do what it's going to do regardless of Fed speak. We had the Fed kind of trying to pour a little bit of cold water on CPI data last week and the market continuing to rally. So talk to me about your thinking on that relationship.
Well, I think the piece is that it's much more important, and you're starting to see the market anchor towards fundamentals. And that's where it belongs in the intermediate and long term anyway, because in those terms, the fundamentals win out. If you look at stock market performance in aggregate on a 1-year period, 75 or 80% of the time it's up, which means that there's a preponderance towards growth built into our system. And that has to do with our economy, because if you focus on fundamentals, focus on what's going on underneath structurally. Are we rebuilding in America? Yes, we are. We've teed up a whole bunch of economic potential basis. If you look at municipal bond issuance year to date, it's the strongest it's been since the early 2010s. That implies substantial investment yet to come in our infrastructure, our roads, bridges, schools, the electric grid. So there's a lot of that where as investors come around and start focusing on, okay, we'll have earnings starting in early to mid-July, and what will those companies be producing? And so that focus on fundamentals is really important.
So Carol, ultimately, then what does this mean for asset allocation, investment allocation, where you're seeing those opportunities, and ultimately what investors need to keep in mind when it comes to maybe balancing that risk?
Well, I think the important thing is you can keep a foot forward into the risk and growth opportunities. If you're a long-term believer in the markets, which we are, you can keep at least a portion of your portfolio, depending on how comfortable you are with day-to-day volatility, as opposed to looking over the next 3 to 5 years. You can keep a portion in those growth-oriented assets. We've been overweight U.S. securities for quite a long time. But the great part is given the 4.5%, 5%, 5+% that you're getting in short-term fixed income, you can balance some of that risk by putting some there too, so that you can stomach that volatility by having a balanced portfolio. And all the calls for the death of the 60-40 portfolio back in 2022, we think were pretty premature.
I want to dig into your thoughts on tech here, because you talk about how we're potentially heading for a little bit of an upgrade cycle, even within some of the more boring corners of tech. Talk to me about what trade that idea might initiate, because there have been some questions from the street about what the upgrade cycle timing might look like, even for some of the biggest tech names. So give me a little bit more on that.
Sure. You're definitely seeing a case where large companies, small companies are feeling like they have to invest to stay competitive. And there's a lot of money pouring into building out that infrastructure. We learned those lessons back when the internet was first hitting the scene back in the mid 90s. And you saw a 5+ year build out of internet infrastructure that everyone had to put the pipes and the plumbing in place in order to ensure that they were going to stay competitive in a new environment. So take artificial intelligence and all the use cases being built. We've all learned about it in a more obvious way with the introduction of GPT a year and a half ago, but the technology itself has been around for over a decade. Large companies have been building use cases for it. And so you have to spend on that. You have to spend to clean up your database. If you want to train AI on your database, you have to spend to think through how are we going to use it? How are we going to use it in drug discovery? How are we going to use it in logistics? How are we going to use it in a lot of different places? So there's a lot of investments there. And then investments in data center mean you have to be able to get the electricity you need. So you have to be conscious about where you're putting it. You might have to help invest to upgrade that grid. There's lots of first, second, third order ramifications that people have to think through. And it's really going to touch every aspect of our lives.